Hey, what's up? This is Cody, and I want to go ahead and give you an update on the Bitcoin cycle. And by the Bitcoin cycle, I mean the halving cycle. So, if you guys don't know, Bitcoin goes through a halving cycle usually every 4 years. And this halving cycle will reduce the amount of miners' rewards that are available for miners when they mine a block of Bitcoin. So the halving, what it does is it basically cuts those miners' rewards in half. And that usually leads to a run up in the Bitcoin price because at that point you have a lack of supply or you have reduced supply. And coupled with the same or increased demand, you get a higher price. So the last time this happened, last time the halving happened was in May of 2020. The previous time before that was in July of 2016, and before that was November of 2012. And we can see here that after each halving, we have a huge run up in the Bitcoin price. It's been almost like clockwork. This has been known as the Bitcoin cycle here. So I want to go ahead and give you guys a quick update on Bitcoin's current halving cycle and what that means for the price. So what we have here first is the next halving date, which is going to be about 375 days from now. This is from buybitcoinworldwide.com. This is their halving clock that they have here. And they're saying here that it's going to be approximately April 5th of 2024, though this date can change either by a week or two or maybe even greater than that. But I'd say it's probably going to be fairly accurate within a couple of weeks. So what we're looking at right now is almost a year away for the next Bitcoin halving. Now, I want to go ahead and take a look at what this means for the Bitcoin price. And so what we have here is this wonderful chart here from Buy Bitcoin Worldwide, and it shows you the amount of time before the next halving and what Bitcoin's price was. So the halving date is just kind of this blue color here, and usually what winds up happening is you have this blue color here, and then as soon as the halving happens, it turns red. And then we usually see a huge spike up in the price every single time. So where we are right now in that cycle, this cycle looks an awful lot like the previous cycle, which was in 2018. So let me go ahead and zoom in here, and I will show you how this compares to the previous bear market. So what we have here in purple, this purple line is the realized price. That's kind of like the average cost basis for all Bitcoin. So what we have is a previous halving down here in 2016. We have a run up after that point. We go up here into about the yellow territory, which is about I'd say about 900 days until the next halving. It reached a peak, and then it came back down again here under the realized price. And now we're seeing this kind of very light green color. So this light green color shows us that we're about 600 days from the halving, and that kind of compares to where we were last year under the realized price at about November or so. And now we're getting here to this dark greenish color. So what that means is that as soon as we pass here above the realized price and go into this dark greenish color, we'll start to see the price start to pick up a little bit. Now, this is a little strange because the 2020, we have this little drop here in 2020. That is the 2020 pandemic. That is the COVID low and kind of a self-induced little mini bear market we had there. So even though we had the around the time of that halving, we still have a huge decrease in the price. Now, I think this is kind of an anomaly, and it's not what I would expect this time. But it made a low and actually went under the realized price again in 2020, and then we saw the halving happen right here at about the May or so of 2020, and then we see an ignition of the price, and it moves up from that point. And then we see again it comes up here in the yellow region. That's about 900 days. It peaks at about 900 days and then comes back down again. So this cycle has been repeated many, many, many times. And if we compare this to the previous bear market before that, we can see something very similar happen here, in which you had a run up, right? You hit that yellow again about 900 days until the halving, and then it comes down, it comes down, it comes down, it comes down to the realized price. We have that light green color, and then in this case we have this dark greenish color. It moves sideways for a little while, and then we start to see the halving happen, and that ignites the next that ignites the next bull market. So that's one thing I've said recently, is that I expect the next bull market to happen in 2024, right after the halving happens. And again, we're looking at probably about April of 2024. So what that would mean for the Bitcoin price is that we would most likely see a series of higher highs after the halving happens. Now, that being said, this situation is a little bit different because of the current economic conditions that we're in, and that are not very conducive to Bitcoin, very high interest rates. So it's entirely possible we'll see something a little bit different. And I think we could wind up getting some sideways action before we actually get to the halving. And so what this would look like is just a very rough idea of how things are playing out in my head, where we have a little bit of sideways action here, and then we get to the halving, and then we finally break above that 69,000 level, and then from there we actually continue upwards to the next bull market. Now, I want to go ahead and talk about another very important metric, and that is going to be the age bands, and specifically the UTXO age bands percentage. You can find this off of CryptoQuant, and it's something very important and worth paying attention to. But this is the percentage of all the supply that are moved within a specific age band, and we can kind of divide this up into long-term holders and short-term holders. And so the long-term holders are people who have held Bitcoin for greater than 155 days. And the reason why that's important is because if you've held it for more than 155 days, you're much more likely to hold it for the long term. And so what we're seeing here right now is if you add up all the percentages here, and again, in that long-term holder cohort, what you get is about 77%. So right now, 77% of holders are long-term holders, or will be long-term holders for Bitcoin. And that's really important, because what you're starting to see right now is the long-term holders take over for Bitcoin, instead of having a bunch of short-term holders come in and buy and sell and buy and sell and buy and sell and trade. And if we go ahead and we back this out and we look at the all-time, we can see that during times of extreme bull markets, like for instance, we go over here to November of 2021, we can see that a massive portion of Bitcoin is being held by short-term holders. Okay, so, and the distribution increases to the long-term holders as time goes on. And especially as the bear market continued, then we saw a huge increase in the number of Bitcoin held by these long-term holders. And I think that's very bullish for the long term, because you have to have a floor, or these long-term holders will put in a floor into the Bitcoin price, and they won't sell until they wind up getting a specific amount, or all-time high, or some level higher than that for the price, and they won't sell and drive the price down even further. So that's why this is particularly important, and this is something I'm going to be paying attention to. This is more of a long-term metric that I try to track and not look at every single day, but it is bullish if the supply shifts more towards the long-term holders. Now, the last thing I want to talk about is more week specific, and specifically what's going on this week. So I have the economic calendar for MarketWatch, and what we have here is a number of Fed governors that are going to be speaking on just about every single day this week. There's Monday, Tuesday, Wednesday, Thursday, and Friday. We're all going to have Fed presidents and Fed governors speaking, so that could potentially add volatility to the market. You also have the U.S. Consumer Confidence Index that's going on Tuesday. That's something that's very important to just see how confident consumers are and what the state of the consumer is. And then you also have on Thursday, you have the GDP numbers coming out. That could be bullish or bearish depending upon what this revision says. Right now, they're saying the median forecast for it's 2.7%. That's growth. So that would definitely be positive. You have jobless claims going on Thursday. You also have the core PCE index on Friday as well. So core PCE index, very important right now. They're having this set at 4.7, but what you want to see is this come back down again, because that would be indicative of the inflation going down, right? And that's what we want to see. We want to see inflation going down and the Fed being less hawkish for Bitcoin and cryptocurrencies. Okay, so that's all I've got for you guys today. If you guys like this content, let me know, like, subscribe, and go ahead and follow me on Twitter for the most up-to-date information. This is Cody the Coin Raptor, and I hope to see you guys in the next video.